Insurance exam questions. Risk pooling. The spreading of financial risk evenly among a large number of contributors to the program. Loss. When someone with insurance endures a negative outcome, such as injury or theft, and expects payment from the insurance company to compensate them. Risk. A situation involving exposure to danger, harm, or loss. Homeowners insurance. A form of property insurance, available to property owners, that covers losses to the physical structure as well as to their personal property and protects the insured person from liability claims. Liability coverage. Auto insurance that protects you against medical costs for the bodily injury of others and damages to the property of others if you are at fault in an accident. Extended warranty. An additional form of protection that can be purchased to extend/enhance a manufacturer's warranty on consumer goods, like phones and electronics. Coverage limit. The maximum amount an insurance company will pay if you file a claim. Insuring agreement. The main part of a car insurance policy, which clearly spells out every point of what coverage you receive for the premium you're paying. Out-of-pocket maximum. The maximum amount of money you will have to spend on health care in a year, after which the insurance company agrees to cover all costs. HSA. Health savings account. An account where you contribute pre-tax dollars for expected medical expenses. Insurance fraud. An act on the part of either the buyer or seller of an insurance contract in an attempt to gain money illegally. Social Security. A federal program that provides monthly benefits to millions of Americans, including retirees, military families, surviving families of deceased workers, and disabled individuals. Deductible. The amount of money you agree to pay towards your losses before your insurance coverage will begin paying. Uninsured/underinsured coverage. Auto insurance that protects you against another driver not having enough coverage to pay the entirety of your losses. Quote. An estimate of what premium you would pay for a certain insurance coverage plan. Collision coverage. Auto insurance that protects you against costs to repair your own vehicle after a crash. Premium. The specified amount of payment required periodically by an insurer to provide coverage under a plan for a defined period of time. PPO. Preferred Provider Organization. A health insurance plan in which providers agree to deliver services for discount fees. Patients can go to any provider, but using non-participating providers results in higher costs to the patient. Insurance agent. An employee of an insurance company who sells insurance policies and provides customer service. Life insurance. Insurance paid to named beneficiaries when the insured person dies. Conditions of the policy. The portion of a car insurance policy that spells out the details for how to make a claim, what information you must have, how much time you have, and how to cancel your policy. Minimum liability limit. The lowest amount of auto insurance coverage one can have to be legally allowed to drive in each state. Medicaid. A federal and state assistance program that pays for health care services for people who cannot afford them. Renter's insurance. A form of property insurance, available to renters, that covers losses to their personal property and protects the insured person from liability claims. Underwriter. An employee of an insurance company who evaluates an individual's risk factors and assigns premium amounts. Declaration page. The page of a car insurance policy which includes a summary description of the insurance coverage provided and gives the maximum dollar limit the insurer will pay for a claim under each coverage. Copay. A fixed dollar amount that you agree to pay each time you receive medical treatment, such as a doctor's visit or prescription. Disability insurance. A type of insurance paid to an individual if they are injured and unable to work for a specified length of time. Comprehensive coverage. Auto insurance that protects you against costs to repair or replace your vehicle after events out of your control such as weather, vandalism, theft, etc. Claim. A formal request from the customer to an insurance company asking for a payment based on the terms of the insurance policy. HMO. Health maintenance organization. A health insurance plan in which patients receive health care from designated providers. Personal injury protection, PIP. Auto insurance that protects you against cost of your own medical bills if you are involved in a car accident. Probability. The chance of something happening or not happening within a certain number of occurrences. Actuary. A person who compiles and analyzes statistics to calculate risk and determine insurance rates and premiums. FSA. Flexible spending account. An account set up through an employer to cover health costs with pre-tax dollars that has very little or no rollover from year to year. Insurance. An agreement where you make regular payments to a company and the company promises to pay you money if you suffer a specified injury, illness, loss, etc. CHIP. Children's Health Insurance Program. A program that provides low-cost health coverage to children and families who earn too much money to qualify for Medicaid. Federal Deposit Insurance Corporation, FDIC. The U.S. corporation insuring deposits in U.S. banks against bank failure. Catastrophic health insurance. Health insurance that provides protection against the high cost of treating severe or lengthy illness or disabilities and usually has a high deductible and lower premiums. Insurance policy. A contract in which an individual or entity receives financial protection or reimbursement against losses.